Hey everybody, Boris with BK Forex. Welcome to the commodity dollar technicals for Feb 5 to Feb 9, 2018 for Aussie dollar, dollar CAD, and Kiwi dollar. And actually a lot of late afternoon action in the COM dollars, especially in dollar CAD, which I'm going to get to. But the COM dollars, of course, I think turned the strongest against the dollar. They became the weakest against the dollar as the week progressed. Certainly the Aussie gave up the 80, 81 level, which we've been talking about forever. That whole 80, 81 was a quintuple top. And if there ever was a place to short with minimum amount of risk, that really was. And it certainly turned out that way. It's really nice to see sometimes technical scenarios just work out exactly as you predicted. And that was one of the easier trades to pick out last week. So yes, Aussie turned. We do have a lot of event risk this week on the COM dollar front, much more so than I think in the majors, and it's going to, I think, probably only just enhance the downward pressure in all the trades. Kiwi also turned, not as much. Kiwi resistance 74.50, still 72.50 to the downside, and Caddy had a whole idiosyncratic story. So what happened is very late in New York session Friday, Justin Trudeau basically came on the wires and said, "Hey, we are perfectly willing to walk away from NAFTA," which is really big news. I mean, it's basically them playing hardball and saying, we really don't care. If you guys are not gonna stick to a deal that makes sense to all of us, we'll just take our chances with the World Trade Organization and sell you guys on an ad hoc basis. So that drove dollar CAD obviously about 30, 40 points higher, and puts dollar CAD into further weakness, because 80% of Canadian exports go to US, and without NAFTA, which facilitated a huge amount of paperwork and flow, and basically worked for 20 years like a charm, made both countries far wealthier than they would have been beforehand. It really leaves a lot of things open, but it just goes to, I think, the toxicity of the talks at this point, that the parties are really willing to walk away rather than just coalesce around the deal that nobody really wants. So that was interesting, and that was sort of the end of the New York trade, and certainly going to be a big development into the beginning of next week. Let's take a look at the calendar, because there's a lot of event risk as well that's worth watching. Of course, we have the RBA on Monday night, Tuesday night to you guys. So Tuesday day to you, Monday night to us guys. And the interesting thing here is, I think, because the inflation data has been so muted, and although employment labor data has been good, the overall growth has still been relatively tepid. I expect the RBA to just essentially say, we're going to stay stationary forever. I think they've been stationary for 18 months in a row, and I wouldn't be surprised if that number grows to 24 months before any kind of movement happens. For now, I think all the banks across the world are in consensus that RBA stays stationary. That only weighs more on the Aussie dollar, although it's sold off significantly already. And unless they kind of surprise and open up the possibility of normalizing policy, I think they're going to stay at these rates for as long as they can. And that's negative Aussie, because US will be raising rates and the interest rate differentials are going to start to weigh on it. Then, of course, we have Kiwi data coming up middle of the week, big data, employment data, which we're bearish, and the RBNZ, which also very likely going to be pretty dovish. I don't think they're going to offer anything of value to the hawks, especially because I think they feel like they have the control over the housing market. The only reason to have been hawkish monetary policy in New Zealand was because of the runaway real estate market, but they've put in a lot of macroprudential controls in there. And I think at this point, it'll be interesting to see. You never know. The Kiwi central bankers tend to be the most, I think, hawkish of the bunch. And they kind of really like to maintain a tight risk on money supply and monetary policy. So they may surprise the market. But generally, I expect them to be relatively bland, repeat the same thing. And that pretty much is going to keep the Kiwi under pressure as well. And then, of course, last but not least, we actually have the Canadian data on the docket. Hard to gauge where we were. We had tremendously strong numbers for last 3 months in a row. And generally, when that happens, you have a lot of payback. So there's potential here for a little bit of a contraction, potential here for a little bit of comeback in Canadian data, which only will add, I think, fuel to the fire. All of this leads me to believe I think dollar Canada maybe go to 125 next week on all of these extraneous pressures. So looking at the charts here, let's take a look at the charts here. The Aussie fell off the cliff here. We if you look at this, I mean these are massively negative candles. And generally when we have, even though this is a 1, 2, 3, 4, was it 1, 2, 3, 4, 5, this is the fifth candle of a downward trend. This kind of a massively strong downward move really tells that we certainly see 78 at very minimum as a continuation pattern. Now, could it bounce back up to 80? Indeed, but generally, I think the trade in Aussie, the momentum trade here, is to the downside as the market just piles out of it and no longer sees it as a high yield haven. This was a great anti-dollar move, and now my point is that if you're sort of trading on a purely fundamental technical basis, the pro-dollar trade really starting to take hold. The only thing that can sabotage the pro-dollar trade is the political risk, and that's the only unknown. But generally, I like the Aussie. Aussie looks to be the weakest against the dollar, and it certainly has more continuation as we go forward. Kiwi, same kind of a thing, not as negative as the Aussie, but Kiwi has a way to go. Now, there's support here, the 73. Once we break that, it really takes us back down to 72s. All of this, by the way, was so obvious in retrospect, right? We talked about the idea that 74s was a double top, triple top in the Kiwi. We talked about the fact last week that Aussie was like a quintuple top in this 80, 81, 82 level. And I said that if we get into 81, 82s, it's great to just simply short against that level. Never really reached it. Your first entry into 81s was the perfect entry as the thing just simply collapsed throughout the week. And now we come to kind of the unknown of the week, because this is what happened. Like 40, 50 of these pips were laid on in very, very late afternoon New York trade after this whole NAFTA bomb hit us. And certainly when we have a big move like this in Canada, we generally tend to have continuity as well. Though Canada tends to be very, very one step forward, two steps backwards kind of a trade. But when we have these big breakouts, they tend to be quite significant in signaling further continuation. Here you have a nice big continuation. Here, even when you have sort of breakdowns, you have a lot of resistance against that move, but ultimately never taking out the highs and further continuation here. Could we come back down to 23s? Certainly, because whatever, the threat on Friday could be taken back on Monday with U.S. saying, hey, we still want to negotiate, and that brings us back down. But overall, to me, dollar Canada is a buy on the dips with a stop underneath the 2250s and a target of somewhere around 25s as a move forward. It really looks like the dollar has really turned against Canada, and the trade here is very much to the upside. So that's how the COM dollars shape up. They are clearly the weakest against the buck. Whether you take the Aussie or the Caddy, the trade now here is to sell them both and get long the dollar against them into the week. Wish you guys the best luck, the best trading. Boris, over now.